What if the hardest part of living in America is not finding a job, not paying rent, and not learning English, but simply understanding how money works? Why does your paycheck take days to arrive? Why can't you get a credit card even if you have savings? Why does sending money home cost so much? And why does the bank sometimes freeze your account without warning? For millions of immigrants, international students, and skilled workers, the biggest culture shock in the United States is the financial system, full of hidden rules, confusing processes, and mistakes that can affect your future, yet powerful once understood. Today, in this video, we break down U.S. banking, credit building, money transfers, and investing in simple terms to help you understand the hidden rules behind America's money system. The first financial challenge most immigrants face is opening a bank account. This sounds simple, but in the United States, the process focuses heavily on identity verification. Banks must confirm who you are before giving access to financial services. You usually need a passport, a U.S. address, and sometimes a social security number. Many newcomers believe they cannot open a bank account without a social security number, but this is not always true. Some banks allow accounts using an individual taxpayer identification number, also known as an ITIN, which helps people without social security numbers participate in the financial system. This reveals the first hidden rule of American finance. Your financial life begins with identity, not income. Before you can save, invest, or borrow, the system must trust who you are. It is not about how much money you bring with you. It's about whether the system recognizes your identity and financial presence. After opening a bank account, most immigrants receive a debit card. At first, it seems like the main financial tool because it allows you to spend your own money. But soon, another question appears. Why does everyone talk about credit cards? Why does the system encourage borrowing? This is where many newcomers experience their biggest financial surprise. In many countries, credit cards are seen as dangerous debt. In the United States, they are essential for building financial reputation. A debit card uses your own money, but a credit card uses the bank's money and records how you manage it. Every payment you make creates a financial history that determines your future opportunities. Here comes another hidden rule. In America, borrowing responsibly builds trust. The system rewards people who show they can manage debt carefully. Saving money alone is not enough. The system wants proof that you can borrow and repay consistently. For many immigrants, this idea feels strange because financial success in other countries depends mostly on income or savings. In the United States, your behavior with borrowed money defines your financial power. This behavior is measured through a credit score. The credit score is one of the most important numbers in American life. It represents your financial reputation and influences your ability to rent apartments, buy cars, receive loans, and sometimes even secure employment. A higher score opens doors, while a low score creates financial barriers. The most surprising part is that your financial history from your home country does not transfer. You may have owned property, run a business, or built wealth abroad, but in the United States, you begin with no credit history. Everyone starts from zero. The system observes your behavior over time and slowly builds trust based on consistency. Building credit requires patience. Many immigrants begin with secured credit cards that require a small deposit as protection for the bank. By making small purchases and paying the balance fully each month, they gradually create a positive financial record. The system rewards time and consistency more than sudden wealth. This reveals another hidden rule of American finance. Time builds financial power more than income. As immigrants start working, another financial surprise appears when they receive their first paycheck. The amount deposited is often lower than expected because several deductions are taken before payment. Federal taxes, state taxes in some areas, and contributions for social programs reduce the final amount. This process is known as withholding and reflects how the government collects taxes throughout the year. Many newcomers also notice that salary payments are not always instant. Most employers use electronic transfer systems that process payments over several business days. The American financial system prioritizes verification and security rather than speed. This reveals another hidden rule. In the United States, money movement is designed to be safe first and fast later. For many immigrants, sending money back home is one of the most important financial activities. Families often depend on these transfers for support. However, the cost of international money transfers can be surprisingly high. Fees include service charges, currency conversion costs, and exchange rate differences. A portion of hard-earned income can disappear during the transfer process. What many people do not realize is that the visible fee is not always the true cost. The exchange rate used by transfer services often includes hidden margins. This means the real cost is sometimes much higher than it appears. Understanding exchange rates and comparing transfer services can save significant amounts of money over time. This reveals another hidden rule of global finance. The real cost of sending money is often hidden in currency conversion. Another confusing experience for newcomers happens when banks freeze accounts or delay transactions. This can feel alarming, but it usually happens because of fraud prevention systems and financial regulations. The United States has strict monitoring rules designed to prevent illegal financial activity. New accounts often receive additional attention until consistent behavior is established. Over time, as trust increases, restrictions usually decrease. This shows another important principle. Trust in the financial system must be earned gradually. Taxes create another major adjustment for immigrants. In many countries, taxes are automatically handled by employers. In the United States, individuals must file yearly tax returns to report income and confirm their tax obligations. Even students and temporary workers may need to file returns. Failing to do so can result in penalties and future complications. The system relies on individuals to understand and meet their responsibilities. As immigrants become financially stable, they begin learning about investing. In many parts of the world, saving money in a bank account is considered the safest strategy. In the United States, saving alone is often not enough because inflation reduces the value of cash over time. The system encourages individuals to invest in long-term assets, such as retirement accounts and market investments. Many employers even contribute additional funds to employee retirement plans, helping workers grow wealth faster. This reveals another powerful rule of the American money system. Saving protects money, but investing grows money. Long-term wealth in the United States is often built through participation in financial markets rather than simple savings. Despite these opportunities, many immigrants make common financial mistakes during their early years. Some avoid credit cards completely because they fear debt, which prevents them from building financial history. Others send money abroad without comparing costs, losing income to unnecessary fees. Some ignore tax responsibilities, creating future problems. These mistakes happen because the system is unfamiliar, not because people lack intelligence. A smarter approach involves learning the system step by step. Opening a bank account, tracking spending, building credit history, understanding tax obligations, and gradually learning about investing create a strong financial foundation. Small actions taken early can shape long-term financial success. Many newcomers wonder why the American financial system feels so complex. The answer lies in its history. Over decades, regulations were created to prevent fraud, protect consumers, and maintain economic stability. The system rewards discipline, consistent behavior, and long-term thinking. While this structure may feel difficult at first, it creates powerful opportunities for those who understand how it works. The truth is simple. The U.S. money system is not designed to confuse immigrants. It is designed to reward knowledge, patience, and responsible behavior. Once you understand how banking works, how credit builds trust, and how investing creates growth, the system becomes easier to navigate. Financial education becomes the key that unlocks opportunity. For immigrants, understanding money in America is more than a survival skill. It is a pathway to stability, independence, and financial freedom. The sooner you learn the rules, the faster the system begins working for you instead of against you. If this video helped you understand the hidden rules of the U.S. money system and made your financial journey clearer, share it with someone starting their life in America. And if you want to be smarter every day, like and subscribe.